I guess we have a decent number of participants now, so we will start off and let the others join in whenever they do. So I think we will proceed with our call today and we'll start on the same. So hello everyone, good afternoon to all of you. Myself Devanshu, and as most of you are aware, I run the investor relations and mergers and acquisition practices at Narayana, Hrudayalaya. On behalf of the company, I welcome you all to the first quarter fiscal year 2023 earnings call of our company. To discuss our performance and address all your queries today, we have with us Mr. Viren Shetty, our Vice Chairman, Dr. Emmanuel Rupert, our CEO and MD, Ms. Sandhya, our CFO, Dr. Anish Shetty, MD of our overseas subsidiary HCCI, and Durga Prasad from the team. I'm sure you have gone through the investor collaterals which have been uploaded on the stock exchanges as well as on our website. Before we proceed with this call, I would like to remind everyone that the call is being recorded and the transcript of the same shall be made available on our website at a subsequent date. I would also like to remind you that everything that is being said on this call that reflects any outlook for the future or which can be construed as a forward-looking statement must be viewed in conjunction with the uncertainties and the risks that they face. These uncertainties and risks are included but not limited to what we have already mentioned in our prospectus filed with SEBI before our initial public offer in late 2015 and subsequent annual reports on our website. On that account, I am sure you guys probably would have also gone through our annual report that has also been very recently updated for the last fiscal. Post the call, in case you have any further queries, please do feel free to get in touch with us. With that, I would now like to hand over the call to Dr. Rupert.
Good afternoon to all. We are pleased to report the highest profitability for our Indian operations during the quarter gone by, which surpassed the previous highs witnessed in quarter 3 of FY22. Aided by steady operations at Cayman, we managed to achieve a consolidated EBITDA of 2 billion at a margin of 19.4% and a PAT of 1.1 billion at a margin of 10.7% for the period quarter 1 FY23. Since a planned capital outlay for India and Cayman is still running behind schedule due to external factors, we incurred a cash capex of over 1.1 billion during the period. Our overall balance sheet and liquidity profile remains strong, with 5.2 billion of gross borrowings against a consolidated cash and liquid investments of over 4.4 billion as on 30th June 2022. Separately, we have reorganized our operations regions to ensure greater alignment among our hospitals. From this financial year onwards, Jaipur Hospital will be part of the Northern Group and Raipur Hospital will part of the Eastern Peripheral grouping. With negligible contribution of COVID-19 and vaccine volumes combined with recovery in elective volumes, we registered the highest ever EBITDA margin of 16.2% for quarter 1 FY23 for our Indian operations. Compared to our previous highs in quarter 3 FY22, the domestic operations EBITDA grew 27.5% while registering an absolute increase of around 300 million and registered a 46.8% growth compared to quarter 4 FY22, which was impacted by the Omicron wave. The Indian operations also registered the highest percentage contributions from the international patient business since the onset of the pandemic at 6.5%. While we are working on new marketing channels to grow this further, we don't believe we will reach our pre-pandemic figures of around 10 to 11% till international travel reverts to pre-pandemic behavior. It is heartening to note that the strong India performance has been achieved through all-round performance across the network, while continuing to be led by our flagship centers. We registered an EBITDA margin of 30% in quarter 1 FY23 as against 28.9% in quarter 3 FY22. Our 3 new hospitals across NCR and Mumbai registered a revenue of over 1.05 billion and delivered a positive EBITDA margin of 6.5%. The non-flagship hospitals, excluding Jammu, achieved a healthy EBITDA margin of 18.8 in Q1 FY23. We remain encouraged with the resilience of our business during these uncertain times, and we shall continue to invest in brownfield expansion across these units over a period of time. Moving on to Cayman, our hospital was affected by COVID restrictions and strict quarantine rules placed by the authorities for most of the quarter and managed to register an EBITDA of $8 million in Q1 FY23. As our expansion slowly continues, we plan to onboard key clinical talent ahead of the anticipated patient volumes, since there is a long lead time for getting visas and work permits. With COVID disruptions minimizing from Q2 and with our Camana Bay clinic making us more accessible, we are confident of sustaining solid performance of this unit going forward. We continue to focus on various technology initiatives to drive performance. During the quarter gone by, we implemented a cost estimation model in Atma HIS to provide accurate estimations for planned admissions, and we also implemented a checklist tool for clinical staff to improve patient safety. Our software team also developed a new user interface for Adi mobile app to improve user adoption and drive productivity of our doctors across the network. Our efforts in revamping the marketing team has paid off, and digital marketing channels now contribute almost 1/4 of the overall India business. On the ESG front, for the period Q1 FY23, we achieved a net carbon reduction equivalent of 3,705 tons, along with savings worth 9.1 million through energy optimization and switching to green energy, and another 3.6 million by upgrading to high efficiency equipment across the network. To improve our focus, we have also initiated the business responsibility and sustainability ESG framework across the group. On the clinical front, we have continued to differentiate our services by focusing on advanced quaternary work in cardiac sciences, oncology services, and GI sciences, and the transplantation across the network. Some of the key highlights for the quarter gone by: we added 3 additional operating rooms to the Narayana Institute of Cardiac Sciences at Bangalore in the Health City campus, thereby increasing the surgical throughput in this unit. This unit did 2,027 cardiac surgeries during the quarter and performed 1,700 cath lab procedures in May 2022, which is an all-time highest monthly volume at this center. The R.N. Tagore Hospital in Kolkata successfully bridged a patient with end-stage heart failure to transplant with an assist device, and this was the first successful such procedure in the Eastern India. And our focus on transplants also generated a strong momentum, which resulted in 75 successful bone marrow transplants, 20 liver transplants, 8 heart transplants, and 192 renal transplants across the group in Q1 FY23. Across the network, percutaneous valve implantation, that is TAVI procedures, was also 30 procedures was done, as well as more than 125 robotic surgeries was done across the entire network for high-end oncosurgical procedures. While continuing to consolidate our operations, we would pursue growth opportunities both in India and overseas to derive synergies from our robust existing operations and maximize value for us stakeholders. We are confident about the prospects of the healthcare landscape across the world and are taking steps to transform our business to become more patient-oriented, digitally native, and operationally efficient. We see our overall business being well poised to continue Dr. Shetty's mission of delivering affordable and high-quality healthcare to all sections of our society. Thank you.
Thanks, Dr. Rupert. With that, we will now open the floor for a Q&A. Request everyone to use the raise hands feature in Zoom to be there in the queue, and try to limit yourselves to one or at best one follow-up question, and join back the queues if you have any follow-up questions subsequently. Any questions, anyone? I don't see anyone raising their hand. Yeah. I see a question from the line of Prithviraj. Prithviraj, you can go ahead. You can unmute yourself and go ahead.
Mr. Viren, I just have a couple of questions. First, on your domestic business, new hospitals, you mentioned they have done 6% EBITDA margin this quarter. So how do we see this margin trajectory over the next couple of years? And when can we expect them to touch that 18 or 20%, which currently your non-flagship hospitals are delivering?
These hospitals, two in Delhi, one in Calcutta, are of different. Are of different sizes and configurations. The Delhi ones, we feel pretty confident that ultimately they will reach the normal trajectory that the rest of the hospitals have, given that these are multi-specialty focused hospitals. So, as for timeline, it's hard for us to give guidance. I would say normally for our hospital, they take anywhere from 3 to 4 years to break even. Post that, another 3 to 4 years to reach a sort of maturity. And then depending on how we expand them, it will take its time. So both three hospitals will be due for expansion, not immediately, but some point over the next 2 years. In Gurgaon, we will want to add 2 more floors. We have the capacity to do so. And Dharamshila also, we're looking to talk to the hospital owner, the trustees, to expand another wing over there. So what happens with expansion is that, again, you incur a lot of manpower when that brings it down. But it does reach a very steady state EBITDA level when you don't do any more expansion. You're just going up the volume growth. So, long answer to your question. I would say to get to that 18-20%, it would take the normal trajectory that all the other hospitals did, which is usually from 5 to 8 years, barring certain exceptions that come about. The exception would be our Bombay Children's Hospital, given that it is highly specialized around children's care. And this has a very different earnings profile, which is quite high in cost. And as it's trying to differentiate itself, it's taking much longer to break even. So there it's not easy for us to say whether it will match the performance of the other hospitals.
And just one more question from my side, again on your Cayman business. You mentioned that, business is now coming back to normal. So can we expect again, the margin and the volume trend to move to historical levels even here?
For this question, I'll pass it on to Anish, who's based over there and will be better able to flesh this out. Anish?
Yeah, thanks, Viren. Hi, Prithviraj. So to your question, yes, during the first quarter of the financial year, we were severely impacted by COVID. A lot of patients were not sick, but the government rules are very, very strict around quarantining and testing, and even a single family member being tested positive results in the whole family needing to isolate. So a lot of our doctors and nurses were unfortunately out of action. Fortunately, that is behind us. And even in the first month, that's July of the new quarter, we have seen both revenue and margins revert to normal.
Thanks. I'll join in the queue.
Thanks, Prithvi. Nitin, you can go ahead with your question.
Thanks, Devanshu. Anish, if I can probably take it forward from the Cayman Island question. Cayman Island essentially has been a big success story for us, turnaround story for NH over the last 2.5-3 years, especially post-COVID. Since you close to the, more closer to the ground, can you just help us understand 2 things? One is, what changed in Cayman Islands all of a sudden that, our business performance really took off? And 2, there's always concerns that some of this may not sustain. So what would your thoughts to be on that account?
Sure. Thanks, Nitin. So there are 2 questions there. So to the first one about, what suddenly changed. I actually, we don't think it's sudden. Of course, we've been operating the hospital for about 8 years. For the first, I would say 2.5 years or so, we had a lot of problems finding our fit in the market. We were actually chasing a very aspirational target in terms of an expectation of medical tourists coming from overseas, which we realize is a game that will play out over years, if not decades, and we are getting there. But I think the initial insight we had was that we had to be built on the foundation of a very, very strong local and Caribbean presence. and markets in the US and Canada and North America would play out over a longer time frame. So I would say from year 3 onwards, that's when we really made that switch and focus in our efforts. And things have, like you said, have been working out well for us so far. We don't see any sudden swing, or we don't see any need for any sudden deterioration that would happen because of any external event in most situations. To your second question about how sustainable is it? We did have COVID restrictions like everybody else in the early half of 2020. That did mandate for a lot of people to be, to remain on island, and people here were happy to be on island because this was something like a paradise where there was negligible COVID and people couldn't come in, most people couldn't go out. So a lot of patients, especially the privately insured and mobile patients who traditionally would go to the US centers of excellence for their care, had to try us out. These people would come to us for certain procedures, but in most cases would go overseas. So for a good 1.5 to 2 year period, we had, in a sense, a group of privately insured local people who had to experience our services. And travel restrictions have been rapidly going away. In fact, right now, if you're fully vaccinated, there are almost no restrictions, including testing requirements, as long as you're fully vaccinated, which most of the population is. That it's hard to say whether those people who used to go out will continue to stay with us, but so far the trends look very, very encouraging and very positive. It appears that they've liked what they've seen, they've enjoyed the experience, and they are sticking with us. But we'll know in the next 2 or 3 quarters or so if that is a permanent shift to us, or there may be some rebalancing. But so far, we're very, very encouraged by what we're seeing.
Thanks, Anish. If I were to just probably take that a little forward again, now we have oncology setup coming through in the Camana Bay units. I mean, 2 things. One is, how does it change the proposition for NHS business in Cayman? And 2, does it do anything more for you from our overall Cayman Island, beyond Cayman Islands, in the broader Caribbean? I mean, does it do anything to enhance our proposition in the broader Caribbean per se?
Yeah, Nitin, absolutely. No, you are right on the mark over there. See, when we've been working with other islands, other governments, other payers, to get them to move their patients towards us for, the value proposition is very clear. We are a Joint Commission accredited hospital. We offer tertiary care at an unbeatable price. The challenge that a lot of the clients face, or a lot of payers face, is that they have existing relationships. So it's difficult for them to move some business to us and maintain their relationships elsewhere. One of the biggest gaps we always had was radiotherapy and oncology in general. This is a very big spend area, if not in volume, but big in spend for everyone. So what we're seeing now is we're on track to have our radiotherapy center commission by Q4. That was what we had committed to, and things look to be on track. With that, not only do we fill in perhaps the last reason for local people to go overseas, at least one of the last reasons, which was oncology and radiotherapy, but we become that much more attractive as a full service, a truly full service option for other governments and payers in other jurisdictions, where they can now say that, all right, I don't have to maintain relationships elsewhere. This is a one-stop solution for me. So that really is a very, very positive sign for us. And that's why we've been pursuing this radiotherapy project for quite some time now.
Thanks, Anish. And again, associated point is, for us, from our overseas expansion perspective, Cayman obviously has turned out to be a significant success. So does now Cayman become an anchor for us to build a business around, or this remains essentially one hospital story or one market story for us from an ex-India perspective?
Sure. No, definitely not. I mean, I think for as long as I can remember, at least 5-6 years onwards, we've been wooed by every head of state, every payer in most Caribbean islands. I mean, I've traveled to all of them, all the English-speaking Caribbean islands. There's not a single market where people don't want us to replicate what we've done in Cayman. Naturally, that's not possible. There are, some very favorable dynamics in the market that allow us to do what we did. Having said that, Cayman will very much, and is already on track very much, to becoming a hub for what we're doing in the region. For the past 1.5 years, we've been engaged with the government of St. Lucia to help them operationalize their national hospital. The intention of that project always was to learn more about the market and take that to the next level if we wanted to. We have similar early stage discussions going on with several other in several other islands. But these are, mostly arrangements where we would be a consultant, we would be an operator, we would not be coming into the table with capital initially. But we always have that option to do that. And, we still have a lot of unused capacity in our Cayman hospital. It still is very much in our favor to use this as a hub and establish relationships to better utilize our infrastructure, especially with the new hospital and the oncology project coming in. But we are a very, very well-known brand in the region, and we have proven that this model of having a tertiary Joint Commission accredited hospital in a small island can work. So I think that there is, opportunity to do something along the same lines elsewhere, but not with so much of an investment and not with such a big presence.
Thank you, Anish.
Thanks, Nitin. Anyone else? Any questions? Yeah, Harit, you can go ahead with your question.
Yeah, thanks for the opportunity. Will you be able to share the EBITDA number for the new hospitals cohort? I think I missed that in case you shared in your opening remarks.
Yeah, so Harit, Dr. Rupert had mentioned that the cohort has delivered a positive EBITDA margin of 6.5%.
Okay, got it. And if I take a step back, I think maybe last couple of years or pre-COVID, we had embarked on efforts to improve the case mix and ARPOBs in our India hospitals network. And then we've seen some of that reflecting in a much improved ARPOB when I look at the numbers today. So where are we in that journey? And if you could give some color on whether we should expect the trajectory in terms of ARPOB improvement to continue.
If you see the clinical work that is happening, most of the work is happening on the high, in addition to the high routine work, the high-end tertiary and the quaternary work, what is actually driving the ARPOBs and the margins as well. We would have seen the number of transplants numbers which we have done across, and also the kind of the quaternary work that is routinely going. And we are constantly working with clinical teams and the throughputs and the efficiencies, and gradually trying to get the ALOS also down. Currently, it is around 4.6, but we are in the journey where we will start reducing it closer to 4.2, 4.3, and then once we stabilize, we will be further coming closer to the 4 kind of a region. And in spite of the quaternary work, we are able to maintain a very steady ALOS numbers, but it's a combination. We are working a lot on the oncology front, where the daycare work on the chemos and the radiations and all that is working. And we are upgrading some of our machines. Our machines in Bangalore have just got upgraded. We were down to only one machine. Similar is the story in Howrah. We will get that up by October. And also we will be commissioning by the end of this, closer to the end of this financial year, the unit in Jaipur as well. So all this will, contribute to reductions of the ALOS as well, while contributing significantly to the high-end tertiary and the quaternary work, which will continue to happen in these sectors. That is what we are working on. And then a lot of other efficiencies and a lot of digital initiatives are also bringing in the efficiencies and the throughput, which we have started to work on, and which will start bearing fruit in the coming quarters.
Thanks, Doctor. That's helpful. And last one from my side on the M&A front. I think last time you had mentioned that we are evaluating a couple of assets. So where are we in that process? And in terms of geographic priorities, which are the key markets that we should expect an M&A from?
Priorities are our key markets, which is Bangalore and Calcutta. There we are evaluating opportunities, but those take a long time to come, and it's not always that the economics favor us. So we'll be taking up brownfield expansion for our health city in Bangalore, and in Calcutta we're not able to get land nearby. We bought a few small parcels, but that's adjacent to our property, but that's a very crowded space. So we'd have to buy land a little bit further away, around 20-25-minute driving distance, and build a new campus over there. It won't operate traditionally like a greenfield, given that there's so much patient volume that will be shifted in certain clinical departments. We will move there. So it will function more or less like a brownfield. So that is our highest priority for expansion. Adding floors to the existing building, adding onco units to all our hospitals, changing the bed configuration, and this brownfield expansion for Bangalore and Calcutta, and eventually for Delhi, Bombay, Mysore, Raipur, all these other places. M&A wise, there are few things we're looking at that are two hospitals under liquidation, few things that come up on asset-light basis with certain trusts, some people that we are talking to for management contracts of the hospital, but those are still a very slow burn, long lead projects that as and when it will come. But our growth numbers are not dependent on that. Those will be coming over and above everything we have planned.
Got it. Thanks for taking my question.
Thanks.
Thanks, Sarit. The next question can be from the line of Ahmed Madha. Ahmed, you can go on.
Yeah, thank you. So my question was related to the last participant's question. Is it fair to assume that there is nothing M&A coming up in this financial year?
No, I mean, there are a lot of things we're pursuing. It's just that our ability to close them and coming to an agreement on the right price means that it's hard for us to tell you exactly that, exactly one is coming up next quarter, one after that, two beyond that. So that's the kind of guidance we're not able to give. We are evaluating 3 to 4 opportunities. We don't know exactly when they'll come up, but when they do, they're all part of the plan, what we had said earlier, which is to strengthen our existing hospitals, have huge focus on Bangalore and Calcutta, and look at the current geographies as areas for expansion and asset-like things in other places.
Got it, makes sense. And one more question related to LOS, where there's commentary that it will reduce from 4.6 to 4. Now, we understand that it is a day in, day out process and you need to improve therapies gradually. But can you give broadly a guideline, or how long does it take to improve this? A year, 2 year, or longer than that?
Yeah, closer to 8 quarters to come to that 4.1 figure. But we are constantly working on that. It's a gradual process which we will see on a quarter-on-quarter basis, a step-by-step reduction.
Got it. Thank you. That's from my side.
Thanks, Ahmed. The next question, Samir, you can go ahead with your question. Samir, you need to unmute yourself, I guess.
Thank you, everyone, and a very good afternoon. So just on the previous question, you had a capex target of 10 billion rupees for the current year. Have done 1 billion. So are we on track for that? And is it possible to break it up, especially for the Kolkata and the Bangalore expansions?
Hi, Samir. This is Sandhya here. We had guided that we are looking at 700 to 1,000 crores over the next 3 to 5 years. So there are a couple of aspects on capex. One is that it's a mix of greenfield and brownfield, some of which could be inorganic. So on the inorganic, Viren has already given a commentary that there is, depending on the timing, it will materialize. As far as the greenfield opportunities are concerned, like we had indicated, the big expansions will happen in Kolkata and in Bangalore. In addition, we are looking at, for example, oncology expansion in Jaipur, in Ahmedabad, in Mysore. So there would be specialities and capabilities that we will be building across different units based on the demand and traction that we are seeing in those specialities. So those are on track. The greenfields are subject to land acquisition, etc., the one that Viren explained. Those will be timed accordingly, and the inorganic, based on the timing, the capex. So I am not able to guide a particular number, but this is the trajectory in which we are on.
Yeah, thanks for this. So did you say 7 to 10 billion, 700 to 1,000 crore over the next 5-year period? Is that what you said?
Yeah, 3 to 5 years, yes.
Oh, I see. Okay. And can you quantify how much would be Bangalore and Kolkata if you have something in, something in mind?
Other than the Cayman one, which we've already spoken about, which is a big investment, a significant chunk of this is currently the intent is to be investing in Bangalore and Kolkata and in other high performing regions based on return that we will be able to generate. So there will be a significant investment out of this in Bangalore and Kolkata. I'm not able to quantify that number because, like I said, some of these are inorganic opportunities and they will have to materialize. So therefore, it is not fair to put a number to it at this time.
Then to say the bulk of it, the bulk of that amount will be for these two geographies.
Okay, sure.
Sandhya, just to, probably get this right, what Samir was wanting to understand, because the 7 to 10 billion is actually 700 to 1000 crores. That's not over this 5-year period. That's what Samir's question was. Since we had guided a figure of north of 1,000 crores for the current fiscal in itself, including all the activities that we are pursuing across organic, inorganic, greenfield and everything. So that remains on track, albeit that we are running a little behind the schedule, Samir, in terms of what you have seen us incur in the first quarter. But if all the things were to go through in terms of what we have planned for the current fiscal, we should be looking at the kind of number that we have previously guided upon.
Yeah, exactly, Devanshu. That's what my understanding was.
Yeah, she got confused with the numbers. Yeah.
No, sorry, we got confused because we forgot to add Cayman into that.
Okay, got it. So it is 1,000 crore for the current fiscal, and okay, got it. Yeah.
There will be an upward bias to the 1,000 crores, so don't hold us on that number, if at all.
Okay, got it. And the other question was on the Mumbai hospital. Can you talk a bit more about how's the asset utilization in whichever way you want to quantify and talk about, and is it really taking longer than what you had initially planned, and what really needs to be done to make it a very optimal usage?
Yeah, for a pediatric hospital, the occupancies has been an excess 100 beds, given our census beds being around 135 to 140. And we've seen a lot of growth in cardiac sciences program and the oncology program, in addition to the very sustained and a very steady run of our pediatrics surgical program as well, pediatric orthopedics and the other specialties which has been going on. So we are focusing a lot on the high-risk pregnancies because that is a big need, which not many wanting to focus on a level 3 in ICUs and the high-risk pregnancies all in under one roof. That is something which we are running on. We're trying to focus on that and move that in that direction. In addition to focusing significantly on the very high-end NICU and the cardiac sciences program and various other things. So for all these expansions with the good traction in the bone marrow as well as the liver transplant programs going, we do need additional capacity, for which we have mentioned about that in the opening remarks, and that is something which we are working on. But this is something which we are utilizing the capacity, and we will, over a period of time, if we do not expand over a period of time, then we will an upper limit for running the services, because pediatric is something which we can't be, unlike other adult program where a lot of efficiency and ALOS can be reduced significantly. We may not be in a position to do that when we are doing very high-end tertiary and quaternary care. So we do need a little bit more of the capacity there.
The capacity will be funded through fundraising from our trustees for that hospital. So the medical equipment, that will be our expense.
So what's the utilization over there at the moment?
The bed utilization is almost close to 67% is what we are doing. That is as per the midnight occupancy, but if you look at the daytime occupancies, it will be a little higher. But when we are looking at the uniformity of the number, it is around 65 to 67.
Okay. So, sir, sorry to belabor on this, but with such high occupancy, I would say it should be very profitable, hospital or operations that you're running over there, which is not. So, is there something that's holding you back?
Rich people don't have sick kids. This hospital was built with the idea that it would be a center of excellence for pediatric cases, modeled on the lines of Children's Hospital of Philadelphia, Boston Children's, and so on. But in a country like India, given that most of the patients who come with the worst symptoms tend to be from poorer backgrounds, we rely on a lot of government funding, charitable funding to support the hospital operations. So in time, it will, once it becomes known as this number one center of excellence and people from all over the country come, the, let's say the patient demographics of the hospital will change a lot, which will, improve the finances. But until that time comes, it will, it's going to take some time. That's one way to put it.
Yeah, thanks a lot, Viren. That's very, very helpful. And let me ask one more question, and this is for the Cayman Island. So, not worrying about the quarter-to-quarter fluctuations. If I say that you are doing roughly 25 million on the top line and $10 million roughly about on the EBITDA line, how should now this trajectory be going forward, excluding the new onco block until that comes up? How much, potential does it have? If you can talk about that.
Anesh, do you want to take this? This is potential.
Yeah, sure.
CI in the East End campus.
Sure. So, thanks, Samir. If the numbers you referenced were, like you said, they've already been achieved in, say, Q3 of previous year, and they're very much our current expectations. So excluding the oncology block, which will be starting soon, we have a lot of room to grow both in Cayman Islands as well as in the immediate vicinity, that is for us, the Caribbean and certain Latin American countries. There are a few service lines which we have yet to commission. We don't do the bulk of primary and secondary care. We restrict ourselves to tertiary care in most instances. There are certain very high value niche areas such as neonatology and pediatric intensive care, which we are planning on commissioning soon, hopefully in the next year or so. But those are currently not offered. These are services for which patients go overseas, and locally they're frequently dubbed, the $1 million babies, because neonatal care in the US is extremely expensive. So there are a fair number of specialties which we have yet to commence, and we have a clear path we have the infrastructure. It's just putting the teams in place, getting the right approvals and getting started. Having said that, our entry into the retail high street location with our clinic has given us a good, strong foothold into the privately insured market. In fact, in the past few quarters since that clinic has been active, we've seen a good improvement in our market share in the private insurance space as well. So I think while, I don't have an exact figure to share at this time, I think we're comfortably seeing a good pathway to easily increasing revenues from the existing facility we have, and with adding new service lines to the existing infrastructure. And this is not to mention that, a lot of our recent growth over the last 2 years was achieved with, I would say, negative performance of our international business because of COVID restrictions. So as the restrictions abate, those are all channels that we will slowly restart. We had to defer a lot of those relationships because of the COVID restrictions. We will be restarting a lot of those, and that is a much larger pool, of course, at a more challenges to that, but that's a much larger pool that we have to tap into.
Okay, no, this is useful. And for the fully vaccinated, are there any travel restrictions now in Cayman, inbound, or it's still pretty much locked up?
No. You are right. I think I mentioned this as well earlier, that if you're fully vaccinated, you can freely enter and exit, but there's just an online portal. You have to fill up some information in it. It's something like our Air Subida. So that's the only requirement, and that was as of a few weeks ago. So if you're fully vaccinated, you're good to go. Yeah.
Okay, got it.
Yeah. You can plan your travel there, Samir.
Will do. Thank you so much.
Thanks, Samir. Anyone else? Any questions? Yeah, Damayanti, you can go ahead with your question.
Hi, I'm looking at your presentation slide where you have given operational review for India. So your ARPOB for the quarter was 12.2 million, which is around 9% higher than the previous year. So how should we look at growth on the ARPOB side, and what will be key driver? And my another question will be: have you taken price hike for your healthcare services for the fiscal, and by how much?
So, Damayanti, as far as the ARPOB is concerned, some of it is coming, like Rupert was earlier saying, in the mix change or the type of procedures that we've been performing. And some of it is coming because of the faster turnaround of patients. And while overall the ALOS has remained the same, but we have been able to turn around a lot of the segments of patients faster. Now, as far as the price hike is concerned, as you are aware, price hike is not our first lever. We normally look at costs. However, to counterbalance the heavy inflationary pressures, we do take price hikes depending from a unit to unit, and that happens in January. So our last price hike happened in January of this year, and the next price hike will be scheduled in next January. It is very, very low single digits. Is the broad average of price hike which we have taken this year. Next year, as we go through the cycle and we roll up our costs and we see how this all stacks up, and the efficiencies that are coming in through the significant investments we have made in technology, we will then see what we have to do from a price point of view.
Sure. So key driver, as you said, is mainly the mix improvement from the current level and scale up of some new units, not much reliance on the pricing part.
Correct.
Mix change, volumes, throughput.
Okay. Thanks. I'll get back in the queue.
Thanks, Damayanti. Anyone else? Samir, I still see your hand raised out there. I believe you are not there in the queue to ask a follow-up question.
No, let me take it down.
Yeah, sure. Thanks. Anyone else? Any questions? Yeah, Gagan, you can go ahead. You can unmute yourself and go ahead.
Yeah, thanks for taking my question. You did give a detailed sort of response to, what's the headroom for growth at Cayman. Likewise, if you could give some idea on what's the headroom for growth in India. And if you could sort of segregate, your northern and western markets and eastern and southern markets, and give your comments specifically for both the markets. What I'm trying to assess is, till your capex sort of comes in or is effective, how much potential is there for the existing capacities to take you further ahead?
So a lot of the capex, what we are doing, so Concall, for example, is done to add a new service line. So that is revenue that is additive, which is not always already happening. Another kind of capex, what we're doing is the room upgrades, the infrastructure refresh, a lot of the equipment upgradation. That is for increasing the yield per room, increasing the throughput, new service lines like adding new diagnostic therapies and faster scans. That's one kind. But even without that, on a like-to-like basis, on the same infrastructure, simple things we're doing on the process side, on the service excellence side, or on the digital side are done to, so I'll give an example. A big problem all our hospitals have is whenever we deal with insurance companies or with government schemes, it takes a very long time to get a patient discharged. Whereas everyone promptly shows up for admission at 9 in the morning. So there's a big mismatch where most of the admissions happen in the morning, but the discharge happen in the evening. So that's leading to a squeeze in beds. Now, a lot of the process change, what we were doing, and on the coordination between doctors, lab, and test results and so on, is so that we can discharge patients faster, earlier in the morning. So then the same number of beds, I can get 5 people in and increase the occupancy. Otherwise, when my crunch is happening in the daytime, and occupancy I'm measuring in the night, you may see it as 65, 68%, but functionally it acts more like a 75 to 80%, which is full occupancy. That is one aspect of that. The other is the clinical team that we bring in. Now, a lot of our clinicians are traveling across. We've done a large number of these procedures called TAVI, which is a very advanced cardiac procedure for valve defects. A lot of them are traveling for doing liver transplant and training our people also. Then there are robotic surgeries where patients are coming from different cities to get it done. So that is happening on the same infrastructure. The levers for that are just, again, lining up patients, a lot of communication, some marketing effort, and having doctors talk to one another and manage the patients well. The third one is, as Dr. Rupert mentioned, which is the clinical teams working to reduce the ALOS, which increases the throughput, which in the same infrastructure will allow us to see more patients. So on a like-to-like basis, these levers will always be there. That is something is pursued independent of everything else we will do. But over and above that, in Bangalore, in Calcutta, in Raipur, in a lot of places, even in our Delhi hospitals, we are really still choked for space. So a bone marrow transplant is usually always full because a lot of patients require that. And so they need more rooms for that. Or similarly, the MRIs and CT scans are always choked in the morning time. Or in the OT, you cannot get a slot in the daytime. Or ICUs are always full. So for that, you would have to also do little capacity addition to address these minor things as well. Then, of course, over and above that, we are looking at brownfield expansion, adding lots of beds to Bangalore and Calcutta because there's just a natural flow. At this stage of our company's life, a lot of patients come because their family members got treated here. So it's not that this is the first time they've ever heard of NH or they've come. Some family member, maybe even their parents have come here, gotten treated, had a good experience. And so these are repeat patients for us. And so that thing just keeps growing the more mature you become as a hospital. And so we have to have enough capacity to take care of them.
Yeah, while I appreciate, that very detailed answer, the issue is, all of these steps, as you say, to start with, in a way help you increase throughput and efficiency. I'm simply trying to, because I'm struggling or grappling with what effective sort of a number, even a ballpark number in terms of additive capacity it can create or increase throughput by. If you could help us somewhat there, because otherwise it's very qualitative and very difficult to for us to assess or model. And secondly, as you increase throughput, I'm sure it also implies some sort of an efficiency and therefore improvement in margins. So would it be a right assessment that as and when this moves up, there's also margin benefits to be had? Both, if you could give us some idea on maybe enumerate the outcomes of these efforts, and second, the consequences of these on the margins.
Yeah. So, Gagan, I'm sure we don't give guidance on that, and it's not something that we would be able to give with any kind of certainty either in terms of guidance on how all these digitization activities, how much it's going to do. I think the best, just to help you, what I've seen other people do in the model is take where we are and take what is best in class. So for hospitals in certain region, best in class occupancy is, let's say 70-75%. Our best in class ALOS is that. Whereas we are at, let's say 50%, and the ALOS is where it is. And so in the gap between the two, you'll have to just make a reasonable assumption that this will happen organically over the next 2-3 years for you to reach that, and then assign some kind of confidence interval on that. But in this part at least, it's not. I don't think we'd be able to give you any guidance on just by doing that, put a number.
Yeah, thanks. I get what you're saying. Just one final one. The brownfield, if you could help us understand both the timeline over which it materializes and to what extent does it add to the existing bed capacity?
These are still in the planning stage. We're still talking with the contractors and architects and designers, doing all of that. these will be little long lead time projects. So this construction alone takes 2.5 years. Getting the planning permission and so on will take another 6 months. Capacity that it would add, it will be added in phases. So ultimately, we want to double the capacity of both hospitals, but that will happen in phases. So you may start, let's say with 200 beds, and then keep adding that every couple of years as and when the occupancy reaches a certain level.
So it would be reasonable to assume that the significant capex budgeted for this year, X of Cayman, will, a large part of the balance will actually bear fruit only 2.5 or 3 years out, or am I completely wrong there?
No. The significant capex that's budgeted for this year that will actually come online won't lead to any bed increase. This is mostly medical equipment and bed refurbishment. That's what we're able to spend. For bed capacity addition, those are long lead projects which will take 2-3 years. So it won't show up in changing the overall bed mix. These things, what we're spending now, apart from Cayman, are more for quick wins, like refurbishment, OT, adding MRI, adding some robots, adding onco. It doesn't really change the bed mix much, but increases your realization. These are very high margin departments.
Thanks a lot for taking my questions. I'll get back in the queue.
Sure.
Thanks, Gagan. Alankar, you can go ahead with your question.
Hey, thanks for the opportunity. 2-3 questions. So one is a follow-up to Sameer's question on the hospital in Mumbai. So if you see, Viren, there's another pediatric hospital in Mumbai which is operating at more than 20% EBITDA margins. We also have the largest mother and child hospital chain in India, which is operating at 25-28% EBITDA margin. So it doesn't seem to be a city problem or maybe an acceptance issue for pediatric hospitals in general in India. So can you help elaborate on what are the issues which you are facing? Is payer mix a larger issue for us compared to some of our other peers, or any other issue which you can highlight?
Yeah, I'll start and Dr. Rupert will elaborate. The key issue, what you identified, and you're mentioning the hospital which are going in for listing soon. Those are mother and child hospitals. They don't do really high-end pediatric work. Most of it is birthing and a lot of birthing related. Since our birthing program has just started, we're yet to get to those sorts of numbers. Whereas we started from day one with a focus on very high-end work on newborns, neonates, young children with serious congenital disease. So that is leading to the difference. Like the patient profile of our two businesses are very, very different.
Yeah, I think Viren has covered it all, but that is one more area where we are focusing on the routine general pediatric work, putting a lot of focus on that as well, where there is reasonably larger margins compared to the some of the higher quaternary work where there's a different payer mix which we are catering to as a.
Understood. But just curious on that. I mean, if you look at, say, the largest chain in India, I mean, 70% of their business comes in from pediatrics, 30% only comes in from maternity. And when I meant about the hospital in Bombay, I didn't mean about, I didn't mention the one which is filed. I mean, there's another hospital which I was referring to, which I guess has a higher pediatric mix. So can you help me understand if you just compare it to the largest chain in India, because the mix is broadly similar, 70% coming in from pediatrics. Is it just because of the mix issue or is there something else?
The patient, the clinical mix, because they have just started doing some super specialty work. Apart from doing the NICU work, which they are very well known for, they do a lot of retrievals and things like that. But they've just started to go towards the tertiary and the quaternary work, and which we are already well established as a provider of those services in Mumbai. But we need to have the right mix, and that is what we are working on. The right mix of proper birthing and right mix of the routine pediatric work, and that is what we are focusing on and trying to get that thing done. The daycare surgeries and things like that.
Okay. So, say in a steady state kind of timeline, would these high-end procedures which we are currently doing, would these be profitable procedures for us?
Yeah, these iron procedures are works well, but it just occupies too much of your manpower as well, because the more tertiary and the more quaternary work you do, the lot of support services also proportionately rises. While the basic secondary level care and the primary kind of a care, you don't need that kind of a manpower support. And that is where we are, and we need to get the right the balance in here, and that is what we are working towards.
Okay. The second question is on Delhi and the Eastern Peripheral. I guess there's been some change in how we have reported our clusters in this quarter. So can you provide some numbers on the margins of Delhi as well as the Eastern cluster, ex of Jaipur and Raipur?
See, actually, if you look at the Delhi cluster, I think we have reported margins. We've reported margins of about 9.5%, including Jaipur. If you look at the Delhi cluster, we would be around the range of 9-10% only in terms of margin, because one of the hospitals has already at 17-18% margin, and the other hospital is on track. So therefore, because Jaipur has got added to Delhi cluster, we have not had a positive bias to our margin numbers. In fact, Delhi performance has been, the North cluster had recorded one of the highest ever revenue, as well as highest ever margins this quarter. So the performance has been positive, even excluding Jaipur. As far as and again, a commentary is similar. Raipur margin profile and the core profile was in fact similar to Raipur, comes with a slightly higher margin profile, but there isn't a significant positive bias because of Raipur in the Eastern Peripheral as well.
Understood. So basically from almost 1% odd EBITDA margin for the Delhi cluster in FY22, we are now, as of this quarter, around 19%, even excluding Jaipur.
Not Delhi cluster. One of the hospitals in Delhi has almost has it 18% EBITDA, and the other hospital is recovering. As a cluster, we will be around 10%, and that there is no positive bias that is coming because of Jaipur getting added to.
Fair enough. Okay. And one final question. Can you comment on capex plans beyond FY23? I mean, very broadly, given that we have not firmed up our exact plans. And also, is it possible to split the broad capex plan beyond FY23 between India, Cayman, and US?
So Cayman, the capex is pretty much done. We will finish the existing capex in Cayman, and we will have adequate capacity that will run us for the next short to medium term. As far as India is concerned, it is like we said, there are various initiatives which are work in progress and they have to materialize. Like we guided, maybe we would invest 700 to 1,000 crores over the next 3 to 5 years in India, but it is not possible to give a more detailed split of this profile right now because there are various moving parts, and some of it will convert, and it's not fair to put a number on that right now. We are intending to invest among all the options that we spoke about so far in the call. And as we go through further calls, we can give you more commentary when things fructify and we have greater clarity.
Sure, ma'am. So basically, even though the exact numbers are not finalized as yet, but very broadly, the capex intensity is going to be higher over the next few years compared to what we have seen in the past. That would be a fair assumption, right?
That is, but that's also because we didn't invest anything during the COVID time. So a lot of also catch-up investment that had to happen. The growth capex is driven primarily by Bangalore and Calcutta expansions, but that would have happened regardless.
Understood. So that's all from my side. Thank you and all the best.
Thank you. Anyone else? Yeah.
Yeah, can I go ahead?
Yeah, please.
Yeah, just one follow-up on the capex. How would you be funding it? What proportion do you intend to fund from internal accruals, and how much recourse to debt would you require here?
So we are. It depends. So certain types of capex. For example, if we are acquiring land, we will be funding them from internal accruals. But say if you're putting up, buying machinery or putting up a building, etc., so that would have a more skewness towards debt. While we don't have an exact number of how much will be internal accruals versus debt, but we do not intend to breach the debt equity of 1, at the outer limit. So we would stay in that range. As the propositions come up and we start building our plan, I think we'll be in a position to give better visibility on that number.
Okay. Would it be a reasonable surmise that, towards the end of FY23, our debt to equity would have changed significantly? Or we would have levered up significantly from where we are?
I don't think we'd have levered up significantly. We are, we're not very aggressive in terms of debt equity. We will lever up in the short term, yes. But I don't know if I will call it significantly. We will try to keep our debt equity under 1. That's the aspiration.
Okay. Thank you. I'll get back in the queue.
Anyone else? Deepankshi, you want to call it? Okay.
Can you hear me?
Yeah, you can.
Yeah. So I think there were some issues with my microphone out here. So I was trying to say that with that we will wrap up our session today. Thanks once again everyone for your active participation, just like previous calls. Like we mentioned at the outset, do feel free to reach out to us in case of any further queries or clarifications that you might need to address. Thanks once again for participating and being there with us on this forum. Thank you.